Hey everyone, welcome back. Today we've got a lineup of topics, but they're all connected by one thread, and that's crypto adoption, where it's headed, who's trying to speed it up, and who might be secretly trying to slow it down. So let's go ahead and jump in. And starting here, we've got this video of Jamie Dimon that I want to play for y'all.
Said that it's as useless as a pet rock. What do you really?
You're going to have some kind of digital currency at one point. So I'm not against crypto. Bitcoin itself has no intrinsic value. It's used heavily by sex traffickers, money launderers, ransomware. So I just don't feel great about Bitcoin. I applaud your ability to want to buy or sell it. Just like I think you have the right to smoke, but I don't think you should smoke.
Since he said that it's as useless as a pet rock.
You're going to have some kind.
So Jamie Dimon is back in the headlines, and he's criticized Bitcoin publicly again, and he's calling it a Ponzi scheme and saying that it has no intrinsic value, and he's even linked it to illegal activities like sex trafficking and money laundering. Now, if you've followed Dimon's commentary over the years, you know that he's said similar things before, and while nobody's denying that illegal activities do happen in crypto, just like they do on any other financial system, calling Bitcoin a pure Ponzi scheme, it seems pretty extreme. But here's the twist. JP Morgan itself has been engaging in cryptocurrencies for years, integrating Bitcoin into its investment portfolios and serving as an authorized participant for Blackrock's spot ETF product. This is the same institution whose CEO is publicly bashing Bitcoin. So let's just say that the optics they're interesting to say the least. Then there's the backdrop of JP Morgan's own controversies, and particularly I'm talking about a settlement related to Jeffrey Epstein's financial dealings. That settlement raised a lot of eyebrows because it involved facilitating transactions for a convicted criminal. Obviously, no big bank is going to have a squeaky clean record, but it's ironic that Dimon is calling Bitcoin a Ponzi scheme whenever his own financial institution has faced some serious allegations about questionable financial activities. But let's be real here. If Jamie truly believed that Bitcoin was a Ponzi scheme, he wouldn't be integrating it into his own client offerings. Just think about it. The liability he'd be taking on if you openly call something a Ponzi scheme and then you start to sell that very Ponzi scheme to your clients, the lawsuits would rain down the moment anything goes south. A courtroom scenario, it would unfold something like, wait, you admitted that this was a Ponzi scheme and you still packaged it into your clients' investment portfolios? I mean, that just sounds like a legal nightmare waiting to happen. So then why is he trash talking Bitcoin? And it's one of the oldest tricks in the book. If you want to acquire a lot of something, you don't go around publicly praising it because it's just going to drive up the price. Instead, you downplay it or you even vilify it so it stays cheap or maybe gets cheaper. Then you quietly load up your bags, and Jamie likely knows that more governments will be buying Bitcoin and Bitcoin-related assets or crypto assets into the future, and he wants to position JP Morgan to profit. In other words, he's trash talking with one hand and pulling out the checkbook with the other. Now, moving on to Blackrock, the biggest asset manager in the world, they recently tweeted that crypto adoption is outpacing both mobile phone and internet adoption at similar points in their respective growth curves. Now, on the surface, that sounds absolutely huge. Imagine if crypto is truly adopted faster than, the tech that revolutionized the last few decades. But let's dig a little bit deeper. First, it does make sense that new technologies would spread faster these days because the internet itself acts as an accelerator. When the internet was brand new, people relied on slow forms of communication. We had the AOL discs by mail, we had radio ads, word of mouth. Today, word is hyper connected via social media, instant messaging, or other online communications. So if something is hot, the entire globe can hear about it literally overnight or within seconds, and that speeds up the adoption curve. That said, the Blackrock chart can be a little bit misleading if you interpret it as, wow, as many people use crypto day to day as they do the internet. That's amazing. But that's not what's happening. Sure, it's estimated that 300 million to 600 million people globally own some form of crypto, but many of them are they aren't using it in their daily lives. It's sitting in a cold wallet somewhere. It's not quite being used the way that we depend on the internet for work, entertainment, or literally everything else in our daily lives. Now, some estimates say that only about 1% of the world's population use crypto daily. Now, that's still a really big number. We're talking about 80 million people, but it's nowhere near the global penetration that the internet or mobile phones have. And for mainstream adoption, you need that daily usage, not just ownership in a dormant wallet somewhere. It's a sign that we're early in the adoption curve and that there's a lot of room for this tech to and infrastructure and regulatory clarity to come into the picture and continue to grow. And this could pave a path for even faster adoption. So speaking of adoption and regulation, let's talk about President Donald Trump and the rumors that are swirling about these day one crypto-related executive orders. Sources suggest that Trump might issue a flurry of directives targeting agencies like the CFTC, SEC, and the State Department to reshape the crypto landscape in America. One big headline is that he might introduce a strategic Bitcoin reserve. I know we've all heard about that. Now, is that even legal is the question. So executive orders, they can't override existing laws or magically create new spending and budgets. For instance, to buy Bitcoin at a national level, you would technically need essentially congressional approval for the Bitcoin funding, and that's because Congress controls the budget and funding and where money is spent. So Trump does have some leverage because his party controls the House and the Senate, so they could theoretically pass new legislation or direct existing budget towards the crypto acquisition. There's also talk about the Exchange Stabilization Fund, ESF, which is operated by the Treasury. The ESF has a broad authority under 31 USC 5302 to deal in gold, foreign currency, credit instruments, essentially to stabilize the value of the dollar. So some legal analysts are speculating that a Bitcoin strategic reserve might be justified under this same scope. After all, the Treasury can hold gold to stabilize the currency. So maybe they could hold Bitcoin as well. However, it's not as simple as snapping a finger. Even if you can argue that the ESF covers Bitcoin, you still need money to buy it. And some folks are floating the idea that, the government could just repurpose seized Bitcoin from criminal investigations. And typically under the current statutes with asset seizures, they end up getting auctioned off. So essentially an executive order would theoretically have to change that policy, which could either be just not selling the seized Bitcoin at all or funneling it into some government wallet. It's a legal gray area, but if there's political will, it's very possible that this will happen. In fact, I would say that, the Bitcoin strategic reserve, I do believe is going to happen no matter what. It's just a question of whether it happens on day one. Now, if a strategic Bitcoin reserve is established, that's huge news. It signals that the government is acknowledging that Bitcoin has a serious asset on par with, gold and other foreign currency reserves. But it also raises a lot of questions. How will this affect the market price? What's going to happen to the price of Bitcoin? Will this open the door for other countries doing the same? And I imagine that it will. And could we see more regulation or crackdown if the government decides to, it needs more control? How is Bitcoin mined? How is it used? But moving beyond the possibility of a strategic Bitcoin reserve, rumor has it that Trump might sign additional executive orders to remove some of the pain points for banks and crypto. One big change might be involve repealing crypto accounting policies that force banks to treat digital assets as a liability on their balance sheets. Now, this matters a lot because if you're a bank and you have to record crypto as a liability rather than an asset, it really would discourage you from holding or dealing in crypto at all. It effectively makes your balance sheet look worse than it actually is. So removing that accounting rule, it could make banks suddenly more comfortable and open to the crypto, and leading essentially a surge within the financial innovation around crypto products and services in the banking sector. Instead of being hostile or standoffish, we might see that traditional banks might start rolling out user-friendly crypto solutions. And think about how Apple Pay revolutionized mobile payments. Now imagine that level of mainstream acceptance for Bitcoin or Ethereum backed by a major financial institution like JP Morgan or Wells Fargo. On top of that, if SEC, CFTC, and other agencies receive new marching orders to essentially clarify the crypto regulations, we could see more unified approach to crypto oversight within the United States. Right now, it feels much like each agency kind of has its own perspective, leading to a really messy jurisdictional overlap and a lot of lawsuits. So if a single executive order or series of directives can kind of get them all on the same page, it's going to be a lot easier for companies and exchanges or even investors to navigate this new market. And in turn, this might attract more global capital into the US crypto market, further fueling adoption in the long run. So let's take a step back and see why all these stories, Jamie Dimon's trash talking, Blackrock's adoption chart, and the whole rumored Trump executive orders on day one thing, they all kind of fit together into this one big puzzle. So Jamie Dimon's contradictions. He calls Bitcoin a Ponzi scheme, but still incorporates it into his client offerings. This contradiction kind of highlights how large institutions often play two games. There's the public relations game, and then there's the behind-the-scenes accumulation game. Next is BlackRock's adoption hype. Now, while the internet adoption comparison might be a bit overstated in terms of daily usage, it still points to the undeniable fact that crypto adoption is growing rapidly, and we're in the early innings. So BlackRock, they wouldn't be championing this comparison if they didn't see a very lucrative long-term future for the space. And next we have Trump's executive orders. If these rumored orders come through, we could see an official stance from the highest levels of government acknowledging crypto's role in the national and global economy. Whether you love or hate Trump, any administration's acceptance of Bitcoin as a strategic reserve asset, plus the removal of regulatory hurdles for banks, would be a massive green light for investors. In essence, we're watching for crypto to move from the fringes to the center stage of finance and essentially politics. 10 years ago, Bitcoin might be something that you hear about in a niche forum. Now it's a topic of debate of major presidential candidates, CEOs of the top banks, and the largest asset managers on Earth. So let's speculate for a moment what the future might hold for crypto. If Jamie Dimon, he kind of continues this pattern of talking down Bitcoin while JP Morgan expands its crypto offerings, expect other big banks to follow suit. So no major financial institution wants to essentially be left behind in what might be essentially a generational shift in finance. BlackRock's stance likely won't change. They'll keep pounding the drum that crypto is here to stay, especially as it opens up a new revenue stream for them as an asset manager. As more mainstream investors dip their toes in, the demand for user-friendly ETFs and other products will only continue to grow into the future. Now, Trump's potential executive orders, they could essentially mark a tipping point, at least in the United States. It sets a precedent that other nations around the world are likely to follow, fearing that they're going to miss out on this strategic advantage. If banks get essentially a green light to start carrying crypto assets without penalizing their balance sheets, it could unleash a flood of institutional money into the space. Now, none of this is guaranteed. Politics can be unpredictable. Markets can swing on headlines, but the trend line, the big picture here is one of crypto's increasingly weaving its way into the fabric of our global economic system. Even those who bash on it, Dimon, Warren Buffett, in the past, etc. The list goes on. They often have some behind-the-scenes involvement in the space. So what does this mean for everyday crypto enthusiasts and crypto investors? It means you're still early in a movement that's evolving rapidly. Skepticism will remain, and caution is always warranted. But just because big names are involved doesn't mean that prices can't go down or that scams won't happen. But the narrative is shifting. Where once crypto stood in essentially a legal gray zone, now it's knocking on the doors of the White House, major banks, and trillion-dollar asset managers. And it also means that we'll continue to see big personalities like Jamie Dimon make polarizing statements. Don't get too caught up in the headlines. The real action is often in the background. So who's developing new services? Who's filing for new ETFs? Who's lobbying Congress? And who's building the infrastructure, exchanges, payment rails, custody solutions that will make crypto as ubiquitous as a checking account. So that's it for today's updates. Thanks for tuning in. And as always, stay sharp out there. If you found this helpful or interesting, be sure to like, subscribe, and share. This really, truly helps me out. And until next time, y'all take care.